income taxes and just kind of working backwards to figure out the schedule that this company's prepared. Fenn Company has been in operation for several years. It has both a deductible and taxable temporary difference. At the beginning of 2019, its deferred tax asset was $690, and its deferred tax liability was $750. The company expects its future deductible amount to be deductible in 2020 and its future taxable amount to be taxable in 2021. In 2018, Congress enacted income tax rates for the future years as follows: 2019, 30%, 2020, 34%, and 2021, 35%. At the end of 2019, Fenn reported income taxes payable of $25,800, an increase to its deferred tax liability of $300, and an ending balance in its deferred tax asset of $860. Fenn has prepared the following schedule of items related to its income taxes for 2019. Fill in the blanks in the following schedule: taxable income for 2019, future taxable amount December 31st, 2019, increase in future deductible amount during 2019, and income tax expense for 2019. And so we'll just go through these one at a time and fill in the information we have to solve for what we don't have to get to an answer for each item of this schedule. On number 1, we're looking for taxable income of 2019. We were given the income tax payable of $25,800, and so we could plug that into an equation saying $25,800 is equal to our taxable income, which we'll call X, times the tax rate of 0.3. And so if we solve for X, that would give us 25,800 divided by 0.3 for taxable income of $86,000. Then, for part 2 and 3 really, the future taxable amount, December 31st, 2019. And so we can plug in the information we do have. We have a deferred tax asset, a deferred tax liability. For both of those, we have beginning balances. The beginning balance of a deferred tax asset was $690. The beginning balance of the deferred tax liability is $750. And then we will want to have or display the change, and that'll give us an ending balance. And so for this information, they gave us, there's an increase into the liability of $300 and an ending balance of the asset of $860. And so we're missing a little bit of the information, but we can solve that for that by taking our $860 minus the $690, which gives us a change of $170 to the tax asset and a balance of $1050 for the deferred liability. So now we can answer this future taxable amount 12/31/19, and let's see where it talked about the future taxable amount is taxable in 2021, which is a 35%. So we can take our 1,050 and divide that by 35% for 3,000. And so that's our answer to the future taxable amount as of 12/31/19. Then the next one says, what's the increase in future deductible amount during 2019? So now we'll be looking at this change of 170. So I'm going to come down a row here, and that is expected to be deductible in 2020 when the tax rate is 34%, so we'll divide it by 0.34 for a total of 500. And then the last question is, what is the income tax expense for 2019? And so over here, let's look at our income tax payable, and then we'll add, let me make these both text really quickly. we'll add the change in liabilities, we'll subtract out the change in assets, and that'll give us our income tax expense. And so income tax payable was given to us $25,800. Then we had a change in liabilities of $300, a change in the deferred tax asset of $170, and then we can do a sum. Maybe, there we go. And so we get total income tax expense of $25,930.